Hey traders, welcome back to another video. This is Disco Bray. In this video, I want to give you guys a very easy, little moving parts 930 model that we trade inside of TOTK all the time. Now, I'm a firm believer that as traders, we need to have an advanced understanding of technical analysis, trading psychology, and risk management. But when it comes to our own personal trading model, it should be very simple with very little moving parts so that we are able to make sound financial decisions without a lot of additives and a lot of unnecessary processes within our protocol. That, I believe, will lead to more profitability in the long term, more sustainability, and a lot more fun, honestly. It's very fun trading a very simple model because it feels almost too good to be true. Well, it is true, and I want to show it to you today with just one trade example. I won't take up too much of your time, but I urge you guys to go back into your charts and see this model play out for yourselves. So, with every model, we first need to identify some criteria, okay? Now, this model criteria has one main section of 4 elements or 4 pieces of criteria, followed by one subsection of 5 other little processes. And we will talk about all of these throughout the trade example. But first, let's list them off. Number 1, with this 930 TOTK model, we need to understand and have a read of the current higher time frame institutional order flow. Very, very important. Trading with the higher time frame order flow is going to bring a lot more ease into your trading. Trading counter trend can lead to detriment if you don't know what you're doing. Number 2 is identifying a proper and fair draw on liquidity. You can do this through a numerous amount of ways, but that will be for another video. Number 3 is open low, high close, and open high, low close. You don't need CRT for this. This is just very basic open low, high close, open high, low close logic that we teach in TOTK. And lastly, number 4, the elements of a smart money reversal, which contain 5 subsection processes, and they are as follows. Number 1, time of interest. Number 2, point of interest. Number 3, SMT or smart money time. Number 4 is called ISP, and this is short for institutional swing point. And as you can see, I've broken off a little bit of a schematic on the left side here to show you what I'm talking about. So these are the 2 visuals of a reversal that we are looking for. You will either have a breaker pattern where we have in a bullish example, a swing low, a swing high, followed by a lower swing low, and then obviously our break to the upside. And then we will have our failure swing, which is a swing low, swing high, higher swing low, followed by your market structure shift and change in the state of delivery. These 2, I won't call them signatures in price. These 2 swing points in price are the only 2 ways that a market can reverse properly, I'll say. So this is the criteria. Now I want to take you guys into an example on ES from this past Thursday, actually, and we will talk about it here. So I am going to bring these up to the right side. They are anchored, and we can keep these on our chart and refer to them. So we will be identifying and talking about this 9 o'clock long position or long opportunity into the all-time highs on ES here. But before we do that, we need to go back a little bit. So, number one, coming into your 9:30 time of interest, and you get to your charts, you first must identify higher time frame institutional order flow, okay? Very, very easy. It doesn't need to be complicated, guys. Just look at what price has done in the past little bit. You can even use an hourly chart if you want to go to a higher time frame. Whatever your fancy is, hourly chart works great for daily order flow. Even the 15-minute. So what we can see here is we have had very recent SMR here from the 6th of September, change in state of delivery, trading above these highs. We are forming a series of higher highs and lower lows, or higher lows, pardon me, right? We have the market trend, range, trend, range, and now we are trending again, right? And we are nearing a draw on liquidity. So we can deem, just by looking at the chart, right, is the market going like this, or is it going like this, right? Very simple. Won't spend too much time on that. Great. So we have deemed higher time frame order flow to be bullish. Number two, do we have a draw on liquidity? Well, as I mentioned, we have these all-time highs up here that we just missed by about 3 handles and 1 tick. Or 3 handles and, yeah, I guess 1 tick. So this high here, to me, seems as if it is engineered buy-side liquidity. And if you look, even on a higher time frame, you would see and treat this as almost a double top, right? Or an equal high, right? Equal highs love to be the draw on liquidity, right? As ICT always says, smooth edges love to be made jagged. Now, we can identify this as our draw on liquidity. And the reason for this and what we are anticipating next is a retracement, right? The market must engage with internal range liquidity to then target external range liquidity. The perfect time for that to occur is during volatility injections, right? Which is what the 9:30 opening is. It is a wonderful time for Judas swings to occur. That would be to induce shorts and to catch early longs basically with their pants down and get them out before going in the true direction again. So now we are anticipating a Judas swing lower to then continue higher, right? Now, open low, high close, open high, low close. We are anticipating a candle to open low and close high inside of PD ray, right? And there is a series of PD rays here, right? We have this hourly BSC, we have this hourly BSC, we have one down here, right? But if you take the most recent swing low to the swing high here, you can see that this one rests just below equilibrium. So this one has a lesser chance of holding up, although it doesn't mean you should discount it. You shouldn't just count it out because there are reversals that do occur in premium. Now, all we're doing is we are waiting for an open low high close candle, right? What I mean by that is take a look at this candle here, right? This 5 a.m. hourly candle. This candle opened low and ran high. This candle was designed to go higher. It opened low, ran high. This candle here opened high, closed lower. Now, what we're waiting for is another candle to open low, tag our POI, and begin running higher. So I'm going to print this hourly candle on replay mode and show you what I'm talking about. And then we'll go into the 15-minute chart to really break it down. So on the hourly chart, almost like a pin bar or just an indecisive candle. But as we say, the 15-minute chart removes a lot of the blur, especially on intraday, okay? So let's use that same concept here for the 15-minute, right? I love using the 15-minute chart for intraday. My higher time frame chart of choice is in fact the 15-minute chart on intraday. So using the logic that I just outlined to you, we just saw this 15-minute candle at 9:30 immediately shoot us lower. So we are already seeing signs of a Judas swing against higher time frame institutional order flow take place. Would we want to buy this 15-minute candle? No, because this candle was designed to go lower. We want a candle that was designed to go higher to print in order to frame a reversal and to bring us to step 4, which comes at our time of interest, which is 9:45 to 10:15. Now watch what happens on this next 15-minute candle. We tag this hourly PD array, this hourly BISI, right, inside of discount, and we close high. We open low, close high. This was a candle that was designed to trade higher, okay? So as this candle is printing, we should already be anticipating moving to elements of a SMR because we already know this candle's printing lower. Okay, this is our next chance. This is the next candle we want to focus on. So we're already prepared, right? So that will bring us to elements of a smart money reversal, which brings us to the subsection here. And then it's just a quick checklist, guys, very quick. We've already checked off most of these things, right? So time of interest. We've already stated that we are inside of our time of interest with the 9:45 to 10:15 macro. Are we inside of a point of interest? We are inside of an hourly BISI right now in discount of the current swing leg from this low to this high. Beautiful. Do we have SMT? All it takes is just one quick peek. You can see NASDAQ here. This is the BISI that ES traded into, which is also the 5 a.m. low. You can see that NASDAQ actually used the higher BISI as its point of interest. So we have SMT on an internal range perspective. So we have our SMT. You notice how I'm doing all of this on the higher time frame. I'm not even on the 1 minute yet. You do the majority of your work on the higher time frame. And then once you have everything in place, then you go down to the lower time frame and you just execute, right? So at this point, we've discovered and confirmed higher time frame institutional order flow is bullish. We've found a good draw on liquidity. We are looking for these all-time highs here. We have an open low high close candle on the 15-minute, right? Let me get rid of these little polka dots here. I like to keep things fairly clean. 15-minute chart. We have our open low candle here, bringing us to our step 4. And now we have time of interest, point of interest, SMT. Once we have that SMT, we can begin dropping down to the lower time frame. Okay, so we will drop down to the 1 minute here. This is when entries will just fall into your lap. Now, we would probably be jumping to the lower time frame, maybe around here, once we are seeing the 9:45 candle print. Immediately, I will use 9:45's opening price as a key level. Yes, opening prices are key levels. Very important for open, low, high close, open, high, low close dynamics. We are witnessing the accumulation, manipulation, and we are anticipating distribution of this 9:45 15-minute candle to bring us into the 10 o'clock distribution. So now what we're looking for is the ISP, or institutional swing point. And you could do this a couple ways. If you are keen with candles, you can just see low, high, lower, low. Okay, we have a breaker here. Wonderful. We have a institutional swing point that is consistent with reversals. You can also go to a line chart and mark out the swing points there. Low, high, lower, low. Lovely. Very simple, guys, very simple. Now, all we're waiting for now is sponsorship. Where? What does that mean? Well, institutional sponsorship is just, to me, it means it is undeniable proof that the market wants to move in a unidirectional manner, meaning it wants to go higher or it wants to go lower. It's not indecisive like this, like a seek and destroy would be. It is undeniable proof that we want to form a low resistance liquidity run, or that we want to target higher prices. Okay? So from there, it also means, for a bullish example, we want to see bearish PD rays get disrespected, and we want to see bullish PD rays form and become respected. So we have our breaker marked out. I'll also mark out this SIBI here on the 1 minute, because that is the first PD ray, first line of defense for bears. I'd like to see that traded through, and then I'd like to see this swing high traded through. Treat it like a breaker, right? Because this is also, if you think, this is a bearish order block on the 1 minute, right? So we want to see this order block fail, this SIBI fail, to continue higher. Now, you can already begin marking up your potential stop loss. Granted, you get the proper low and then you wait for it to go higher, right? So you've got 1.62 R. Even if you want to go for some more R to R, what you can use is standard deviations, measured moves to get you to your 2R, 2.5 R. That's a wonderful area for profit taking. However you want, but this high is the drawn liquidity, right? You also have these engineered highs right here. So, enough babbling on, let's keep playing price through. Okay, immediately we see price closing above this down close candle here. Not the wick, but the body. The body is the most important, right? The wicks do the damage, but the bodies tell the story. Same goes for when you're monitoring change in the state of delivery. We're not in yet, though. We're waiting. Now we are seeing, boom, 955. We trade through this SIBI. We trade through the 945 opening price. And on this next candle, we trade above the breaker. I'm not going to tell you guys how to enter. I would enter inside the breaker before we trade above it, but that is, again, probably for another video that I'll do for you guys on implying breakers. But the safest entry, trade above the breaker. Tap into it, boom, there's your entry. You can put your stop loss at the very low, which is the safest. You could put it at the low that we form the institutional swing point through. You could count PD rays, place it under the third PD ray, however you want. The low, I will say, is the protected low at the moment. So from there, you are in. And now we should see price deliver higher. So this candle here at 955 was our proof of institutional sponsorship. And then it's just time to execute. We get another tap into that breaker. Notice we close above 945 opening price and we do not close back below it. That is what I call true change in the state of delivery. Next up, we are seeing accumulation, consolidation occurring near 50% of the range that we're working within, being all-time high, drawing liquidity. Or you could even say from this high, consolidation above 50%. And then we deliver beautifully to 2.5 standard deviations. All-time high was the draw, and it just reaches up into -2 standard deviations to get that proper measured move. From there, we reverse. So that is, in a nutshell, a very easy, low, little moving parts model that I think you're going to love. It's going to make your trading a lot more simple. So, like I said earlier in the video, I urge you guys to backtest this, right? See what you guys can find. This isn't the only time of day that this occurs. This occurs on a fractal level, right? It's your job to go into it and find it for yourself. Because I could tell you guys all these things until I'm blue in the face, but until you see it for yourself, you will not really understand its power that it holds. So, with that being said, guys, I really hope you enjoyed this one. If you guys want to give any feedback, you can tag us on Twitter. Or if you're a TOTK member, you can mention me or Zusi or Jamie or Mike in the chat, and we will be happy to be given any feedback. Or you can tag us on Twitter, X, at the ones that know, and let us know what you thought. So until next time, take care and be safe.